As human beings, we really, really don't like uncertainty. We don't operate very well in uncertain environments. And yet that's exactly what the market is all the time. You go to the market every day and you have to deal with uncertainty.
You have to have a passion for the market. So you have to be able to think, and you have to have a passion for it. Those would be the two personality traits that I would say are most important.
My fundamental knowledge is the first thing I go to. And I find that US indices react more to what the market mood is by the underlying fundamentals than a Forex pair would.
My play for the NASDAQ is one last run up to give this high a go.
The ability to go into a trading room like How to Trade and get perspectives from all over the globe.
We have everybody from everywhere that trades all kinds of different things, all at different stages of their journeys.
You truly get really a broad view of the markets and viewpoints that aren't necessarily the same. And always remember, there's somebody on the other side of your trade.
In my opinion, our far right, our outliers here are being wildly undervalued.
It's okay to be a beginner with us in our community, and it's okay to have some experience.
If you've got a community there and people around you, whether you're not necessarily just talking about the markets, but you're talking about something else to take your mind off it, that community feel gives that.
We have a fantastic academy. You don't get educational content that runs alongside prop firms and live streaming and experienced members as well with trade ideas. You don't get that unique combination all in one place that often, and you do get it with How to Trade.
And that's really powerful, I think, in terms of having that course in front of you that you can learn from and perfect, and you can tweak fit to how you feel suits, and then become funded from that.
And be a true entrepreneur, really, and try to level up in life.
It's just a question of applying it, and then the trade ideas that come as a result of that, and then all of a sudden, bang, you've got a great trading edge.
Get good at one market. Get good at one type of analysis. Get good at what you're comfortable with.
It doesn't matter what you're doing. If you're persistent and you're willing to learn from your mistakes, you'll get there in the end.
But you always come back to the table, and that's how you know you're a trader, when you're always there.
Hello everyone, welcome to NFP Day. I hope everyone is doing well. What a week we've had. I don't even know where to start. FOMC, European Central Bank, Bank of England, mega tech earnings last night. It's been, one for the ages really. I can't remember a week like this. And then we've got the small matter, of course, of non-farm payrolls today, which is always interesting. Great to see the action in the room. We are live on YouTube as well. So a very good morning, afternoon, good evening, wherever you're watching from on YouTube. And of course, hello to the trading room. So many messages coming through. Conker, Maggie, Kit, Trader, Peter Paul, Uni, Ark, Louis, hello to you all. Gentlemen, Nick, Shane, how you doing? Sorry for waking you up early, but it's important.
I'm doing fantastic. It's been a big week. There's no sense stopping now, Connor. I mean, let's get in here. Let's finish strong. What a week of economic events. And you roll into a Friday typically, and you have your footies on and your pajamas on, and it's going to be a day off. Nope, not this week. So we're opening February with a bang. It's been a pleasure being with you guys all week long. What do you think, Nick? I mean, this is a big time number today.
Yeah, a massive number. It's the cherry on top of the cake for me. And what has been just the most amazing week in trading that I can remember in a long time. I can't remember the last time we started a year in such a strong fashion, having that compression of central banks all together and then topping it off with the biggest economic number every single month. It's been amazing. There's a lot of tired eyes in the trading room, and there's a lot of tired eyes on this side of the camera as well. So I'm sure we're all due a well-deserved weekend off. But, we've got to push through this. We're looking for a decent number for non-farm payroll today. The market has been up and down. I mean, just dissecting it is going to be a weekend's job in itself. But yeah, I'm absolutely looking forward to it. I think it's going to be absolutely fantastic.
Yeah, there's a few people in the room who have conked out a little early, and you can't really blame them. But we haven't got that privilege, of course. So I just wanted to go through, obviously, for some people, this might be their first NFP. We've got 11 minutes. So really quickly, I just wanted to go through what the non-farm payroll event is, just really quickly, and exploring those payrolls, just so everyone is on the same page. So essentially what it is on the first Friday of every month, we get the Department of Labor's Bureau of Labor Statistics. They release an unemployment report basically from the previous month. So for the February release, which we get today, you'll see the jobs report for January, and for March, you'll see it for February, and so on. Now, of course, this is always interesting in any climate. A lot of time, this is probably the biggest volatility event of the month. May not be this week, but we will see. But within this jobs report, the public has access to pivotal information on wages, job growth, and unemployment in the US. And the three releases are officially called the non-farm employment change, the average hourly earnings, and the unemployment rate. It's always released at 1:30 p.m. UK time, and it sends shockwaves throughout the Forex world. So let's have a run through the actual payrolls itself, what figures we're going to get and what they mean. First up, we have the non-farm employment change. That's normally the driver for most volatility on non-farm payroll day. It's going to show the number of people employed during the previous month. And the reason it causes so much movement is not just because it's, vital economic data, but it's the first sight of employment rates for the month. So it tends to be the one that everyone seems to jump on. If that one's a little bit ambiguous, we're not quite sure what that jobs number means, we can look to the unemployment rates. That will show the percentage of the US workforce who are unemployed, but they're actively seeking employment. And it's that part which is important as well. And finally, we have information on average hourly earnings change. That tends to be one of the leading tools to analyze inflation. You'll probably hear a lot of language from the Federal Reserve talking about wage inflation. That tends to be a theme at the moment. And, that burden of higher prices, it's normally passed on to us, to the consumer. So that's why that's important to look at as well. In terms of the forecasts today, Shane, what are we looking for?
Yeah, I mean, we're looking for recent trends to continue and sort of see a decrease in that job creation here in the States. So for NFP itself, we're looking to come down to 185,000 from 223,000 previously. I think this is sort of in line with most street expectations. Our unemployment figure, we're looking for an uptick here. Now, we're going to go from 3.5 to 3.6. Biggest thing to remember about NFP is that unemployment statistic is one of those things that's a political football. And when unemployment rises, there gets a lot of heat in Washington, D.C. and those players in Congress and the sitting administration. So a lot of times the NFP number, they're like, but when that unemployment number moves, we get things like press conferences, statements, and the folks at the Fed have to address that. Average hourly earnings, we're looking for a decrease to 4.3% from 4.6. I think that if I was picking a number that was sort of a tertiary statistic or peripheral number, I would say that is it. So these forecasts, we're looking for a pullback here. The market is definitely, I think, priced that in just a bit. I don't know where we go from here. To be honest, I'm on pins and needles. I don't know how this is going to impact, the rate hikes are going to impact this jobs number. I would be ready for anything. I think that's good advice.
Yeah, definitely. But when we look at the state of play, Nick, at the moment, you can see that NFP, those numbers, how they have decreased month on month. Yeah. But generally speaking, we've seen it above the forecast each time. But the markets have taken it as the jobs are softening. Now, what do you see here? Because in the room, for example, we let out a poll on this and what we think the number will be. And we had 61% in total when you combine them, thinking that we'll have an above forecast, so above 185,000, and the rest thinking below. What do you see here?
Yeah, well, I think that that's an interesting barometer to do that kind of statistic in the room, because it shows that a lot of people are looking for slightly above expectations at the moment. Now, if we are going to get a dovish print today on the non-farm print, I suspect that what Shane was saying before is exactly right. I think that the market has pretty much, to the most part, priced that in with the rally that we've had in stocks this week with the Federal Reserve and everything that's been surrounding that. So I would say that the risk for me is that we get a number that's far higher, a hawkish number. And you can see in those charts there that the roll-off that we've had, that NFP has been stepping down. The unemployment rate has been stepping down as well as those average hourly earnings. So it is definitely sort of like focused in one direction. Now, when it comes to actually putting a game plan together around this is the chart that we used this morning. This hopefully shows you a very clear breakdown of how to play the number. We're looking for a very simple, it's always in trading, it's always trying to take the complexity and boil it down into something as simple as possible, because when you've got to make a spare of the moment decision, you don't really want to be thinking too much in terms of if this happens then that, so it's really all about trying to get a rough idea of which way to play it. So if we get the market is expecting 185,000 out of the non-farm payroll today. If we were to get a number that is in that area and below, that would be a dovish play. That is basically looking for stocks up, dollar down. So that's euro dollar up and stocks up, because remember that in a Forex pair, you've got the dollar on the opposite side of the currency quote. If we were to get an opposite end number of that, and this is potentially the risk, I think, that the market hasn't factored. If we were to get a 223 number and maybe slightly above, that is not priced in. That is stocks down, and I suspect we would get quite a seismic reaction from the stock market if we did get a more hawkish number. Now, if it's in the middle, if it's somewhere in the middle and it's unclear, and you get that initial spike of volatility, what we're going to get from that is the market then tends to sort of like focus on the next most important metric. So there is very much a clear hierarchy in the way that this data gets printed. So it's non-farm payroll first. If there's any ambiguity in that, if the number is muddy somewhere in the middle and the market can't quite figure it out, there'll be more emphasis placed on the unemployment rate. And it's the same deal. You look for a hawkish play if the unemployment is actually going down. You look for a dovish play if unemployment is actually ticking up. And that is obviously, as you can see in the pink writing there, stocks down, dollar up for hawkish, and stocks up, dollar down for dovish. If that then gives us a sense of ambiguity, or there is still some discrepancy of like what is actually going on today, you would then move to the focus on the hourly earnings. So that can be sometimes when you aren't quite sure about the number, and then you hear later on, or you read in the press later on, what exactly, all of a sudden that the market was focusing on the hourly earnings. That was what really set the market off. That's usually the reason. It's this hierarchy that is critically important.
Brilliant. Yeah, no, fully agree. I'm leaning towards, I think the pain trade is one. If we get an upside surprise, I do think there's expectation of a dovish play. In terms of market movements, Shane, anyone on YouTube looking for any particular market? Maybe gold?
Of course. I mean, there's a lot of talk about gold, Euro USD, the pound dollar. I know that the pound dollar and the Euro USD, those are going to be difficult to unpack after what we've seen about the last 48 hours. So let's just go with the gold. Do you have any thoughts on gold, Connor?
Yeah, well, on the gold market itself, the reaction that we had initially from around 104 was really 1904 was really nice. However, we have broken out to the top side when we look at it on a 4-hour chart, but on the daily, looks to me like we've just clipped those highs, and we had quite a nice bearish engulfing candle yesterday. So when I look at that price action, it's quite ugly. To be honest, but I do expect now there to be a more seismic move in either direction. And to me, I favor the downside play, but that 1893 level for gold, I think is really important. If we get a break below there, then for me, and I mean a daily close below there, then I am bearish on gold going forward. I'm not sure what you think on that, Nick, with 3 minutes to go.
Yeah, well, I mean, I'd be looking for a gold down from here, but obviously I'm looking for a hawkish number, even if that's the case. The market's looking for a dovish number, so it's looking for gold to be bid up from here. Now, the line in the sand for me, really, in terms of this, is 1920. That's the area I would want to focus on most when it comes to gold. But I don't know. I think there's a lot of people looking to play gold to the upside from here, so I suspect that when you do get a crowd of people that are long gold, I know commercial hedges are long gold as well, at some point you'll get some kind of a squeeze, but that's really all it is. And this time next week you look at it and you think, oh, look at the whipsaw movement that we had, and it looks like a squeeze situation. But we've just got here on the charts that you can see in front of you, we've just got just 2 minutes to go now. We've got euro dollar top left. We've got the S&P 500 in the top right. We've got the NASDAQ, your favorite there, Woodsy, on the in the bottom right hand corner, and then we've got gold in that bottom left hand corner. They're all on 15-minute charts, so that's probably just about enough where we can gauge the volatility from.
It looks to me like we're bidding on stocks just before the release, so we've got 1 minute to go. You up or down on stocks, Shane? I know you're preparing for everything, but
yeah, no, my canary in the coal mine right now, I'm watching Meta stock like an absolute hawk. We're trading 186 right now. What we saw yesterday out of Meta was unbelievable. And in my view, I mean, really was leading the train for the NASDAQ. So I'm watching Meta closely in pre-market trade. We're seeing a little bit of a pullback from yesterday's highs. I don't know. Maybe somebody knows something somewhere. I will say this. There will be a big time miss on NFP at some point this first quarter, and it will be to the downside. So let's stick around. Let's see. Maybe it's today. Maybe it's not. I don't know.
I think it could be.
We are nearly there now. I've got the score on, so I'll shout it out as soon as I hear it. Good luck, everyone. 517. Wow.
Good Lord.
What?
That's a major right there.
Wait, did I just hear that right? 517.
517. Wow.
Wow.
That is
Wow.
major. My goodness. Wow.
Yeah, equities indices getting smashed
That's
right away.
absolutely
Right away
smashed.
on that. Futures market's going crazy.
Well, ADP was out of whack, wasn't it? And people were saying, oh, well, that's no proxy for like what's going to happen. But my goodness.
That just goes to show it isn't, is it? Because ADP was lower, right? It was quite a lot lower. That's why we don't use it as a barometer for what's happening with NFP. Wow. I mean, how do we break down this move? I'm looking at the Nasdaq.
Right,
and
you got to, yeah. I mean, you've got to be short stocks here. That is a major hawkish play. Wow. If if the stock market was thinking that the Federal Reserve is going to come in and prop everything up, no, that's not happening.
Well, this is the
Dollar
thing. We've got
102.
that battle, haven't we? We've got that battle between the markets and central banks. The markets don't believe what the Fed are saying. Well, will they now? Because this is all leading into. Well, what about the average hourly earnings and unemployment rate? Is that ticked higher or does it matter?
Yeah, I don't know. Well, yeah, I don't know. Let me have
Unemployment fell. Did it fall?
Unemployment fell to 3.4%.
Yeah. My goodness me.
Is it an election year? It's not an election year yet, is it? Holy cow. I mean, that's amazing. I mean, the Fed officially has carte blanche. They can do whatever they want.
Yeah.
They can do whatever they want right now.
Yeah.
And the job one will be pricing stability. How do they react to this?
Credibility.
I'd say that late year cut is off the table. It has to be.
Has to be. Yeah,
now.
yeah. Credibility restored completely. Absolutely.
Wow. I cannot believe that.
Well done on those Nasdaq shorts as well. Top work.
Thank you.
Well called that, Connor. You had to be patient with it, but wow, well done.
It took some fortitude to hang in there yesterday. Yeah. I think I would have cut them and came back later. But good, fantastic work.
Well, it's like what you were saying before, Shane, just before we came on air. You were saying about looking at the Nasdaq close yesterday on that US Open. Really volatile, really ugly on the fast time frames.
Amazing. I mean, the participation right now in the markets is unbelievable. If you're going to be an active trader, I would say Q1 2023, write that in your journal. Yeah. you can say, hey, I was there.
That was
wow.
That's a big number.
That is incredible. When we look at that in comparison to numbers we've not seen a number like that since August of 2022. In fact, that would have been the second highest number of 2022. Wow. Like, I mean, that's incredible stuff, really.
I thought I misheard it. I thought, oh my God, I've got that right. But 500, wow.
Well, this is the thing. I've been saying that I just can't believe how ahead of themselves the markets have got, really. And I'm not saying it's over and people saying the bull market's back, but this is just a sign, that Powell was saying that the markets have got different measurements to us. He said that openly. He didn't care about it. He just said they do. The markets have a different measurement. Yeah. Well, I wonder if that goalpost has now changed, but we're seeing so much whipsaw here. It's crazy.
That's fantastic. Yeah. There's definitely an interesting texture to be going into next week with now. Because what have we got next week, Shane? We've got CPI next week, have we? Or is that the week after?
No, week after. We got RBA. RBA next week. It's going to be fascinating. We'll be trading a lot. We'll be talking a lot about the Aussie in those Asia-Pacific previews early week. So get ready because the RBA who knows what they're going to do. We tried to get a jump on this number and figure out, okay, unemployment ticked higher in New Zealand. Okay, there's pressure down under in Australia as well. And then we came out with that slate of those ADP numbers and those JOLTS job openings from Wednesday. None of it meant a darn thing. Yeah. None of it meant anything. Always remember that NFP stands alone. It walks alone. It's got a mind of its own. Today was a major shocker. I can't tell you how big of a surprise that really is.
Look at gold. Wow.
Well, I've not had a chance to. What's happened to gold?
It's just collapsing. That dollar strength really coming in now. There's all those stocks falling. We said this yesterday. We've all been saying it on all the streams this week. Be very careful. You want to buy into this rally. Be very careful, and there's the result.
And also be careful as well. Just look at that and going, right, I say I'm selling stocks at like, or I'm buying dollars straight away. Because what you'll find is, it tends to not be that easy. We know now, the direction that we're looking for in the next few weeks. Wait for the markets to settle a little bit, because there's going to be some whipsaw here, where you get the buy the dips coming back in. But just now we know that direction. Just keep that in your back pocket, because that's your friend. And then we know in the future, in the next couple of weeks or in the next week, when the market settles down, we can then look for that trade, dollar up, stocks down, potentially going forward. So just be patient.
Amazing.
Yeah, that's a good point. And for intraday traders, a lot of short-term traders, the patience, I got to take that theme a little bit further. Remember, if you just banked a bunch of pips, or if you're going to catch a big-time runner in the next 30 minutes, that Wall Street opens, it's coming. It's coming, and the trend really has been big-time reversals as soon as they run the ding-ding in New York City. So be careful. If you hit your targets, or if you make a bunch of money before the market, put some of it in your pocket. Don't give it all back. Never make a winner or loser. Rule number 1 of trading. Absolutely,
yeah. I love the look at the euro dollar now. That dollar strength really coming in. We said this yesterday as well. The ECB didn't want anything above 110. They didn't get it. And we said, do you remember, Connor? We said that this 108.87. If we get down there by the end of the day, you've got problems for the upside. Bingo. Definitely. There it is. Absolutely beautiful.
Yeah, textbook really. GU as well was holding firm, even though there was dollar weakness coming through. GU was holding firm at that daily supply zone, clipped the highs, now broke out of that range yesterday, which is why I entered that GU short. And now for me, my take profit's at 1.18413. So I'll be holding till there, hopefully. But yeah, I mean, that is just stunning, man. That's why we love it. That's why we love this industry, right?
Yeah. I mean, what an end to the week as well. I actually said this morning in the stream, I thought, people might be tired, so it might be a bit of a damp squib almost, because people have had enough. We've had so much volatility this week, but wow, that really just topped it all off.
I'm not tired anymore. It's just shot me back into life. It was like I just done a Jaeger bomb. Oh man. Okay. Yeah, I mean, we'll continue to monitor that price action, of course, coming forward. Should we do raffle time?
Yeah, so let's jump on with the raffle. Obviously, hope everyone has entered into the raffle for today, sponsored by IC Markets. Your chance to win $1,000. So we run this every non-farm payroll. I think you have to just open an account with them, and then if you remember the site, then you get joined in, and then the magic computer algorithm then picks the winners. So fingers crossed, all I have to do is hit the button and it should work. So fingers crossed. Good luck to everybody that entered, and let's pick some winners. So there we go. Rolling the raffle now. Okay, this is a bit where I get to pronounce people's interesting usernames. Let's have a look. We are looking for congratulations to Bacaro74. You are the first winner.
Congrats.
Right on.
Congratulations to Kennen Yorg. Hello. Congratulations to you, winner of $1,000. And Jangel21, congratulations to you as well. Fantastic. So 3 worthy winners. It's very, very nice. I hope they've all made money this week as well, because that would just be even better to be taking $1,000 home from IC Markets as well. So congratulations to you all. That's fantastic to see. Fantastic.
Okay, I'm not sure whether I need to lay down or what from that. I guess just digest it, wait for those markets to settle down. We can continue monitoring that price action if you like for a couple more minutes. Yeah. Looks to me like there's not much of a pullback here. Looks like we're pushing session lows on the Nasdaq, on stocks, on gold, and the dollar's still ticking up. So has this shifted any sentiment for you guys, or is it something you'd expected coming into it? Obviously, you didn't expect that as such, but
I think it gives the Federal Reserve carte blanche. Really, I think it says I think it sends a very clear signal to the market: be very careful, because you can get ahead of yourselves here, and it's a very clear sign that something like this can come along and just change the dynamics quite viciously as well. So you've always got to be very, very careful. I think that there's going to be, there's certainly more. Put it this way: there's certainly more room in the tank for the Federal Reserve if they want to use it. And they've got God knows how much firepower at their disposal. So yeah, I'm absolutely looking forward to next week now to see exactly how this thins out over the next few hours, and then a bit of a weekend analysis, and then pull up some really, really nice trade ideas for next week.
Yeah. Any final thoughts on that, Shane?
The game has completely changed. I mean, we've been watching PMI numbers and really just pulling statistics out of nowhere. I'm looking at New Zealand unemployment. I'm trying to get a gauge on where we're at globally. There's no recession. I mean, the Biden administration will come out and spike the football within, I put the clock on it. They will be out there very soon saying, oh, our economy is roaring. There's a job. There's 2 jobs for everybody that wants one. There's no recession. Everything's fine. We're getting inflation under control. The Feds, I mean, they're kicking back in their chairs as well. Yeah. They're saying, nah, we know what we're doing. We're not hurting anybody anywhere. I don't know. Part of me says a print that big. These statisticians, they're magicians. Where did you get that number from? That surprised everybody. Nobody knew that was coming. So for me, there is no recession. I think that smashed recession talks. Yeah. And that rate hike, that emergency rate hike, maybe for May.
Yeah, you mentioned that.
They can do whatever they want. I mean, like Nick said, carte blanche. If Powell wants to raise rates half a point in March, I mean, I'm watching the odds right now. We're up to about 85, 87% for a quarter point in March. That's going ahead, and maybe one more for May.
Good stuff. Well, I think I speak on behalf of all of us three when we say it's been an absolute pleasure to share this content with you all this week. It's been a week like I can't remember where we've had a week like this before. So yeah, it's been an absolute pleasure, and thank you, of course, for the continued support in the trading room. And we've had a couple of live streams on YouTube as well. So thank you for joining. We'll be back next week to break all of this down, which I can't wait for now. 6 streams per day covering everything in the markets. So come and join us if you like, www.howtotrade.com, and you'll see the trading room there. And you can come and join us on these live streams because we do this every single day. Gentlemen, it's been an absolute pleasure. Have a good rest this weekend, and hopefully everyone trades the action well on this late Friday, and have a great weekend as well. Thank you very much.
As human beings, we really, really don't like uncertainty. We don't operate very well in uncertain environments. And yet that's exactly what the market is all the time. You go to the market every day and you have to deal with uncertainty.
You have to have a passion for the market. So you have to be able to think, and you have to have a passion for it. Those would be the 2 personality traits that I would say are most important.
My fundamental knowledge is the first thing I go to. And I find that US indices react more to what the market mood is by the underlying fundamentals than a Forex pair would.
My play for the NASDAQ is one last run up to give this high a go.
The ability to go into a trading room like How to Trade and get perspectives from all over the globe.
We have everybody from everywhere that trades all kinds of different things, all at different stages of their journeys.
You truly get really a broad view of the markets and viewpoints that aren't necessarily the same. And always remember, there's somebody on the other side of your trade.
In my opinion, our far right, our outliers here are being wildly undervalued.
It's okay to be a beginner with us in our community, and it's okay to have some experience.
If you've got a community there and people around you, whether you're not necessarily just talking about the markets, but you're talking about something else to take your mind off it, that community feel gives that.
We have a fantastic academy. You don't get educational content that runs alongside prop firms and live streaming and experienced members as well with trade ideas. You don't get that unique combination all in one place that often, and you do get it with How to Trade.
And that's really powerful, I think, in terms of having that course in front of you that you can learn from and perfect, and you can tweak fit to how you feel suits, and then become funded from that.
And be a true entrepreneur, really, and try to level up in life.
It's just a question of applying it, and then the trade ideas that come as a result of that, and then all of a sudden, bang, you've got a great trading edge.
Get good at one market. Get good at one type of analysis. Get good at what you're comfortable with.
It doesn't matter what you're doing. If you're persistent and you're willing to learn from your mistakes, you'll get there in the end.
But you always come back to the table, and that's how you know you're a trader, when you're always there.